We finally have a big update on Ripple XRP, folks. If you did not know, XRP is one of the 10 biggest cryptocurrencies. So this will totally take us to the moon on one day though. In this video, we will be talking about the great benefits of investing into Ripple XRP and the current stock price prediction of this cryptocurrency. So be sure to smash the like button. So guys, Ripple has found itself embroiled in a lawsuit with the SEC. The lawsuit, which was filed in December 2020, accuses Ripple of selling $1.3 billion worth of unregistered securities. Quite a few cryptocurrencies have shattered their previous highs in 2021, but XRP is an exception. Its high point was in January 2018, when it briefly reached a price of $3.84. Now, according to the market cap, Ripple XRP and any event managed from its launch to be from those top 10 cryptocurrencies in the crypto market. With the limited supply of 100 XRP tokens, almost half of them are already in circulation in the crypto market, and soon it is expected that 100 XRP tokens will be in circulation. A giant bunch of investors is going to jump shortly in the crypto market to buy XRP, and possibly you would be one of them. A spike in the prices of XRP tokens is expected due to a series of chores planned for the future success of Ripple. When XRP and the XRP ledger are used for global financial transference around the world, and used for just about every major underlying transfer of money, and now tokens in every institution in every country in the world. That is no big deal because they literally need to transfer trillions of dollars per day. And there's a couple more pieces of information that he may have been looking at in case you've been looking at Ripple news lately. A new headline called ISO 222. That stands for International Standards Organization. And basically, what this is a group of financial companies and tech companies. According to multiple sources, XRP is showing signs of dropping against Bitcoin in the future. Given the formation of a head and shoulders pattern, indeed XRP is about to swing into a widespread and powerful movement, with the greater tendency being that XRP is going to be on the up again, following data from Investopedia. The formation of a head and shoulders pattern indicates a reversal from the bullish to bearish trend, a trend that other fast-rising altcoins like Dogecoin currently experiences. This trend believed to be one of the most reliable trend reversal patterns. It indicates that the Shiba interface crypto rally is about to come to a halt, just as XRP is seen to be doing the exact opposite, dropping from its all-time high of almost $2 from back in April. At the same time, renowned Bitcoin hints at the likelihood of a significant shift to trading altcoins from those holding Bitcoin. A tweet on Monday stated there's a high possibility we see a major bounce in altcoins after Bitcoin has done itself in the alt season 2021. Bitcoin is one of the worst performing cryptos of 2021, and many of its holders are in pain. Being backed up by gold will surge the price of XRP because, like the dollar, gold's value rarely fluctuates. Notably, the dollar does not stand alone as a currency. Just like other currencies, the dollar changes value. Its rate also changes daily as currencies trade on the foreign exchange market. The foreign exchange value of any currency is subject to many factors. Some of these factors include the country's debt level, the central bank's interest rate, and the country's economic strength. If all these factors are strong, then the value of the currency rises. Thus, the value of the US dollar is majorly determined by everything that happens in the foreign exchange market. So gold is a better option for XRP. If XRP is backed up by gold, its value can surge to 70 easily and can reach up to 3 figures in value, which will provide a great start for the token to thrive. Another advantage of backing the XRP token with gold can also reduce volatility because the price will not fluctuate all the time. The plans of XRP suggest that it is only going to go up. They are also going to be using the XRP token for certain things within this platform, one of which is converting any fiat or any value or any cryptocurrency into any other fiat or any value or other cryptocurrency. In this video, I'm not talking about all the details of how that works out, but basically they're going to be utilizing the XRP token to do some of that. They're going to be using some other cryptocurrency networks as well. Part of this will give XRP massive exposure to all the trillions of dollars that will be transferred through this new network. Now, folks, that is all for this video. Subscribe.
Hey, Doug, does this play into that argument that maybe this inflation is transitory? What do you think?
Well, I think it does. If it's really in the service sector, there's a lot of bounce back there. That's the place where you'd most expect one-time increases like we saw in the April and May reports, because the service sector was flat on its back for a year, and you expect this sort of weak pricing to recover as we go forward, and and that'll probably be a transitory phenomenon. I think this was a disappointing report in the sense that the labor force participation rate didn't budge. We're still well below pre-pandemic levels. Without bringing those folks back into the labor force, we don't really get back to the levels of employment that we expect. And I think that's been the most disappointing part of what we've seen so far in the first half of this year.
Hey, Jason, what do you think explains that lower participation rate? What's keeping things at bay?
Yeah, labor supply has been the issue. There are more job openings than there are unemployed right now. I think part of that is the virus. Part of that is it takes time to find jobs. I think unemployment insurance has definitely been playing a role in giving people more time to find jobs or keeping them on the sidelines. The good news is all of those factors are going to come to an end. And so the 850,000 job number we have this month, that's a pace we should be able to sustain over time going forward. I agree the report is a little bit conflicting. The household survey here showed employment went down, even while the payroll survey showed employment went up. We look mostly at the payroll survey because that's the better measured one. But at a time like this, we can't be sure about any of the measurements. But overall, the headline is a great number of jobs here. I think that's the most important thing in this report.
We'll get back to Steve to ask more about that household survey in a moment. But Allison, want to talk to you about what you see coming out of this. Better than anticipated numbers. It's hard to look for too many weaknesses outside of that participation rate.
Yeah, although I think it shows that this is going to be a long slog back to where we were, to get back to where we were before the pandemic. And I worry some of this could stick around, especially, so other panelists have pointed out, we have more people leaving the labor force. They might stay out. I'm also worried about the fact that some of the inflation might not be transitory. I mean, if you bid up wages because there's a supply shortage, then it's really hard to lower wages later. So to some degree, if the service inflation is being driven by a lack of labor supply, it could stick around much longer than we would like and could become a lot more persistent.
Hey, Doug, let's talk about that. Why is it a problem if people stay out of the labor market? Is it because it prohibits us from being able to reach our full potential? I mean, what happens here? Do we not have the right people trained for these jobs, or do you think that this is something that clears up in a few months when people go back to school and the unemployment additional insurance drops?
So if you go back a month, if you looked at the index of weekly payrolls, it was rising at an annual rate of 11%. So labor demand was white hot. And you worry about the mismatch between that and a labor supply that isn't growing very rapidly. And so I was looking this month to see that participation rate bump up and to see the sort of pressure ease. It eased on the other side. Payrolls are at an annual rate of 2.3% in this report. So the labor demand isn't what it looked like in April and May. It's tapered off a little bit. And so that mismatch isn't as big a deal.